Hey everyone, welcome back to the Commercial Real Estate Library. I'm Dayma Tamnawala. I'm joined with my co-host, Garret McGillivray, and today we are joined by Graeme Moore. Thanks for being here.
Thanks for having me.
Graeme Moore is, I don't want to butcher your title, I always do this, but VP of Marketing for Polymath, which is a growing platform for, you can describe it a lot better than I can.
So it's a platform that makes it easy for companies to create what are called security tokens.
Okay.
And so most people go, I have no idea what a security token is, that makes no sense. What it is it's just a digital security, so a financial security that's represented by what's called a token on a blockchain.
Okay.
The majority of financial securities that exist today are pieces of paper.
Okay.
And if they aren't pieces of paper, they're essentially a PDF document. And the problem with that is these things are very hard to trade. Okay, and so that's why you have things like trades occurring in the financial market with a stock or a bond, and the settlement actually occurs 3 days later.
Okay.
And so when you're moving all of these financial securities around that are actually pieces of paper or digital representations of these pieces of paper, there's a lot of problems that happen, right? So trades might actually not be executed, trades might get lost going from party to broker to clearinghouse to broker to party. There's a whole bunch of problems that's involved in this system, and that's why it costs at least $5 to trade a stock, could be up to $30. That's why it costs a lot of money to trade a bond. That's why stock markets aren't open on the weekend, right? They have to reconcile all of these trades all the time. That's why stock markets aren't open at nighttime, because they would get overrun with too many orders.
So when you click a button, it's not just trading the stock. There's a bunch of stuff going on in the background with humans making errors.
Yes, yes.
Okay.
And humans, as we've learned over the last, let's say 50 years, since the start of kind of this technological age, is generally using machines and computers to do things is more efficient. Right. It's much better to do that. And so what we can do with these security tokens, these digital securities that are represented by tokens on blockchains, is the trade can actually become the settlement, right? So I have a token that I have control over and I want to sell it to you. When I click sell, it actually transfers ownership to you instantaneously, immediately, for almost free, right? And we can do that with you being anywhere in the world. You can do that with me being anywhere in the world. And so the idea is that we're going from a system where a lot of the stuff is analog in the capital markets, and a lot of stuff hasn't really been updated over the last 30, 40 years, to a system where everything is completely digital, right? And it's because you're starting from the bottom of the technology stack being digital, and so then the rest of the stack becomes entirely digital as well, which makes everything easier, more cost efficient, more transparent, more automated, and pretty much every single party that's involved in the capital markets process is going to have essentially a better outcome.
Okay. Can we talk about blockchain technology as a whole, just to give, I think a lot of people have heard of blockchain technology and Bitcoin and heard it as a buzzword, and I think last year we're thinking, okay, I'm going to have to seriously invest some time in thinking about it, and then the hype died down a little bit and they were like, screw it, whatever. So can we talk about what blockchain technology is and maybe what Bitcoin is and why it's important?
Yeah, the way that I kind of originally thought about blockchain technology and cryptocurrencies and all of these different things is they're the internet of money. And so the way that I think about that, and this is what we talked about 2 weeks ago, is...
Oh, by the way, Graeme gave an awesome keynote at a Colliers Converge conference. So it was like, that's like my dream, to just be up there. You killed that.
It was good. It was good. It was a lot of fun.
Yeah, it was really interesting. So sorry, go ahead.
Yeah, and so the idea and the way that I think about it is that the internet that we all know and love and use every single day, literally every single day, you're watching this on the internet right now, is the internet democratized and decentralized information and communication. And so what does that mean? So before the internet, the only way that you could get any valuable information really was to go somewhere or to get something from one centralized source. Right? So if I wanted to learn something, I had to go to a book in a library, or I had to buy a specific book, or I had to watch CNN, where CNN dictated the information that I wanted to hear. Right. But then after the internet, once everyone becomes completely democratized on the same level playing field and everyone has the same access to everything, I can get information from anybody I want on Earth, anytime, anywhere. It doesn't matter who I am, doesn't matter who they are, with essentially no restrictions. And so when I'm watching the Arab Spring take place in Egypt, right, like I can view that event taking place through a 10-year-old's Twitter feed.
Right.
You know, whereas before I would have to rely on CNN or ABC or Global News or whoever to tell me what I want to hear. And kind of on the same stroke is, the thing that I like to think about is like an email between Donald Trump and Justin Trudeau is the exact same thing in technical terms, and it happens at the same speed. Everything else is treated the exact same as if I send you a cat photo.
Right.
You know, and so like once everything becomes entirely democratized and decentralized, you can also build all of these cool things on top of it because the internet is permissionless. And so you have a decentralized and democratized system that's permissionless that allows anybody to build these interesting applications on top of it. Like that's why we have Uber, that's why we have Airbnb, Pinterest, Facebook, Twitter. All of these different things are built on top of the internet because it's permissionless.
Right.
And so blockchain technology is very similar in a lot of ways to the internet, but instead of being for communication and information, you can think of it like for value or for money. And so the financial system doesn't work in that way I just described that the internet allowed for communication, right? Like the financial system, you have to live in a certain place to participate. You have to have a certain amount of money to participate.
Right.
You have to do the right kinds of things according to a government or to a bank to participate. And what blockchain technology is allowing for is for the financial system to become completely democratized and decentralized. So now I can live in a completely rural area in the Amazon jungle, but as long as I have access to the internet, which a lot of people do in rural Amazon, which you wouldn't really think about, they can now participate in the global financial system. They can now send value anywhere, to anyone, anytime. There are no bank closures, there are no holidays, there's no such thing as Christmas on the blockchain, okay?
Right.
Like it runs 24/7, 365, just like the internet does, which is a vast improvement to the financial infrastructure we have today, where you need to go to the bank between 9 and 6, right? Like while you're already at work, which makes no sense.
Yeah.
And also in the financial world, it kind of matters where you are, as I was saying, right? Like who you are, what's your identity, right? But Bitcoin and these other associated technologies give anyone access to a global financial system that runs 24/7, that doesn't care who they are.
Okay. And something that we were talking about before the cameras turned on, like as an example, who might not be able to have access to a financial system? Like who are the people that are going to benefit from this technology?
The people who are going to benefit the most right away are people in developing countries. So, for example, it's incredibly sad to think about. Some places in the world, women aren't allowed to open a bank account. It's just, it's illegal for a woman to open a bank account.
Yeah.
That is crazy to think that in 2018 that's how some places in the world work, right? Like a woman literally needs to have a man go open a bank account for her and say, yeah, she's allowed to do this.
Yeah.
Right? And so with Bitcoin and blockchain technology, you can now have access to all of these financial services and all of these value transfer mechanisms and value storing mechanisms by being anybody, anywhere, anytime. It doesn't matter who you are, right? All you have to do is have access to the internet, which a vast majority of the world now has, right? Like the vast majority of the world now has a cell phone, which has access to the internet. Even though we might think like, oh, people who live in like Central Africa, like, you know, like they're completely off the grid. It's like, well, they're off like the grid in the way that we kind of think about it, but they still have cell phones and they still have access to the internet.
Right.
Crazy thing is 50% of Kenyan GDP is conducted through the transfer of cell phone minutes.
Interesting. Okay.
Right. So in Kenya, they don't trust in the government currency as much as they trust in cell phone minutes being able to be used. Right. So when
the currency fluctuates too regularly, or
yeah. So it's that, and it's also just way easier to use something that's completely digital.
okay.
And so like when you come to my store, I'm a Kenyan shop owner in this example.
Yeah.
You come to my store, you want some bread, right? You give me 5 cell phone minutes. You don't give me dollars. You don't give me Kenyan dollars. You don't give me euros. You don't give me USD, Canadian dollars. You give me 5 cell phone minutes, right? And so at that point, like, what's money? You know, well, money is whatever we agree is money. And so, like, all these technologies, all these cryptocurrencies and things, people go, oh, it's not real money. It's like, well, tell that to somebody in Kenya who uses cell phone minutes as money.
Right.
You know, tell that to somebody who in Zimbabwe in November 2008 experiences 80 billion% inflation in 1 month.
Right.
right? When you experience 80 billion% inflation in 1 month, tell somebody that this other thing isn't money and tell them that their government currency is money. It's not.
Yeah, I think you were mentioning in Zimbabwe at that time, they had signs up in the washroom that were saying like no Zimbabwe dollars as toilet paper.
Yeah. People were literally using Zimbabwe dollars as toilet paper because it was worth less than the toilet paper.
Right.
Right? Like they had $1 trillion bills. Like it's mind-boggling to think about that, but that has happened many times over the course of human history, is all these periods of hyperinflation, because when you give governments the ability to print money, when they have debts denominated in that money, they're going to take it.
Right.
They're going to take that opportunity, right? When a government's hundreds of billions of dollars in debt and you say, hey, but you have to pay the debt in this green piece of paper that you can print whenever you feel like it.
Yeah,
they're going to print the dollars whenever they feel like it.
Give us more debt.
And they're going to print a lot of it, and they're going to take on more debt. And that's like kind of the idea sort of that blockchain was born out of, and why it became so exciting, and Bitcoin especially,
right.
Was in the 2008 financial crisis, banks that took on risks that they shouldn't have been taking on, we then just said, oh, that too bad, like that was not good of you guys, but here's a bunch of money, and we're going to bail you out. Right? And so when you can just print money out of thin air and you can do whatever you want with it and just give it to whoever you want, it's generally not the best system. And so by contrast, Bitcoin is created on a fixed production schedule. Every 10 minutes there's new Bitcoin created, and only a certain amount of Bitcoin will ever be created.
Right.
And the way that you create it is by solving a mathematical problem and then proving to the rest of the network, hey, I solved this mathematical problem. And then you get rewarded with new Bitcoin for solving the problem and keeping the network secure. And so we're moving from a world where 5 white guys go in a boardroom and say, let's print $1 trillion, to a room where you actually have to do computational work or prove something in order to print new currency.
Right.
And so, like, to me, that's a good thing. Like, anybody, in my opinion, who says that's a bad thing, I would question their motives, and I would question how tight they are with the people who print the currency.
Right.
The one thing with the Kenyan, transfer of minutes, like they use the minutes, it has a utility, right? Because they can then use that on their phone, and then, they can call people, because I don't know how scarce, minutes are, or the cost of even getting the minutes. Because like, how do you get the minutes in the first place, right? Because does the cell phone company just give it to them, or
so they would acquire them with some other currency.
Yeah, or it's like they give them a chicken and then they get 100 minutes or whatever the hell the conversion rate of a chicken to minutes would eventually be in Kenya. I don't know.
Right.
But that's the issue I feel like a lot of people have with cryptocurrency, is that the fact that it doesn't have a true utility. Because it is, trading paper, but like paper used to be backed by gold, but it's no longer anymore. And now they can just do whatever the hell they want with it, but it's backed by a country effectively at this point. Versus cryptocurrency is something it's its biggest strength and its biggest weakness at the same time, the fact that it's not backed by anybody. So how would somebody, get around that issue that they might have with it?
Yeah. First off, I would say, what does being backed by a country mean? What does that mean?
Because when you're backed by a country, like the Canadian dollar, for example, if Canada's like tanks, then it becomes basically Venezuela and or Zimbabwe, and then the dollar isn't worth anything, right? Which is why those countries are, black holes for any form of currency, and why people are leaving those particular countries. You're trusting in the system of people that is part of that country, is part of that unit, because you're a group that's grouping together. If one person, a bad egg comes in, like if we have a bad prime minister or something, and that sinks the country by printing off trillions of dollars, then all of a sudden, whoop, we get that hyperinflation, and then we're screwed. But we're having, like, it's a trust network, effectively. Because like we're trusting the people that we put in power, we're trusting the people that we do business with to not, screw the system or fraudulently mess it up. And therefore we have this, agreement that our money is worth X, right? Versus, again, Bitcoin is just what can you give me for it, basically? Like, it is free trade in that sense, and it's great, but a lot of people have you know, they're scared of it not being backed by anything. Like it did go through a big hype train when everybody was like, oh my God, Bitcoin, global currency, and then that's when the price shot up. And then people just got excited about something else, and then it came back down to a more moderate level.
So maybe a good question then is, like, considering the hype, the rise and fall of Bitcoin last year, and you know, may just be one of the peaks and valleys that it's continued to have in an upward trajectory. But considering the rise and fall, why would we think that it will continue to grow? Bitcoin or any other coin?
Yeah. So I mean, first, right. So you said trust. I think trust is one of the most interesting words that we can talk about with blockchain technology, because when you talk to computer scientists and technologists and venture capitalists, a lot of them see Bitcoin as a new computing platform with the increased feature of trust, right? And so a cool thing, it's I think this was Ben Horowitz talking about this from Andreessen Horowitz, venture capitalists. Like, they've invested in Skype early, Facebook, Pinterest, like pretty much anything like early tech that like completely blew up, that became a unicorn. Like they pretty much have their hand in it. And he talks about blockchain technology as being a new computing platform with the added feature of trust. And so, like, you look at a cell phone that comes out, right? And like the first smartphone comes out, iPhone comes out like after BlackBerry, or even when the first BlackBerry comes out, and most people look at it and they go, "The hell, I can't do a spreadsheet on this." Like, yeah, it's a new computing platform, but I'm not going to do a spreadsheet on this tiny little screen. Like, this thing is worthless. Right. But what a cell phone was it was a computer with the added feature of GPS and a camera. And so, yeah, it can't do a spreadsheet very well like your computer can, but you can build something brand new that was never before possible, like Uber, right? Like, you can use your location to summon a car from somewhere else, right? You can't do that with a computer. Like, you can now, because now computers have GPS in them as well. But the idea is now you can build Instagram, right? You have a camera on your phone anytime. Now it's a new computing platform with new apps that previously weren't possible, because nobody's going to carry their computer around like this, or even when you had a desktop, nobody's going to carry that around. And blockchain technology is this new computing platform with trust built in, right? And so what I mean by that is, because it is a completely global, public, verifiable ledger that anybody can look at any time, I do not need to trust you that you have the 5 Bitcoin you say you have. You literally can show me using cryptography and math. And so, like, we're going from a world where the only way previously to transact value and to interact with somebody when you're not in the same room is through a trusted intermediary, right? So if I want to give you a $5 bill, like, I give you a $5 bill, thank you. But like, as soon as we're not in the same room, we need to use a trusted intermediary to make that transaction happen. Because I could just say, yeah, I have a $5 bill, here it is, but like, it's not real. Right. And so what you need is a trusted intermediary to transfer that value, confirm that it is actually a $5 bill, and then get it to the right place. Right? And so that's like how banking started, like hundreds of years ago. Like that was their purpose. Right. Is to transact value between people who don't live in the same place. Today, I can do it with Bitcoin. You don't have to trust me. I don't have to trust you. I don't even have to know who you are. You literally, like, one of my favorite quotes is, on the blockchain, no one knows you're a fridge. Okay, it's like, you could literally be a fridge that's connected to the internet, and I can pay you $5, you know? Like, and then you start thinking about the whole entire world of, like, do you think all of these Internet of Things devices that are coming on, do you think all of these robots that are becoming connected to the internet, do you think all of these AIs that are being connected to the internet now, do you think they're going to use US dollars? No, they're going to use the most efficient form of currency that they can find, right? And so they're going to use these cryptocurrencies. But like, the idea is, like, trust. Like, you might trust the leaders in your country, you might trust your government, and maybe they're great people, you know, and maybe they have your best interests at heart, but they're still fallible human beings, right? Like, I would much prefer to trust math, which literally, like, 1 + 1 is 2, you know, like, it's not like we have to go like, oh, but like, do we trust Graeme that 1 + 1 is 2? It's like, no, literally 1 + 1 is 2. There is no other answer. And so I prefer to put my trust in math and cryptography, which is pretty steadfast, it's right or it's wrong, right? Whereas in the other system that we currently live in, that most people live in, we're putting our trust in human beings who may have motives that aren't similar to ours, who may be fallible, who can be gamed. And then the other thing about trust that I find really interesting is that the Bitcoin network is the fastest supercomputer network that has ever existed on planet Earth. It is the fastest and most secure computer network that has ever existed. And so, like, to illustrate that, like the actual, what people would look at as being like the fastest supercomputer on Earth, it runs at a rate right now of, I believe, 90 petaflops. And so flops, like floating operations per second. Like, how fast can you perform a computation, and like how often can you do it? And so like that supercomputer, which is in China, that runs at a rate of 90 petaflops. Okay, the Bitcoin network runs at 90 million petaflops. Okay, so you can take the top 500 supercomputers on Earth, connect them together, they're still not as fast as the Bitcoin network.
And that's because it's global and has all these different participants.
That's the beauty of the decentralization of the Bitcoin network, right? Is once you spread computing across the whole entire world and you give people an incentive mechanism to contribute, hey, you get Bitcoin if you contribute to the network, then you get the fastest supercomputer that has ever existed. And so it's like, I trust the world's fastest supercomputer network that uses math and cryptography instead of human beings. Like that's just the decision that I've made.
Yeah.
But in a sense, you are still trusting human beings to determine the value of the Bitcoin too. Because if people don't attribute that one Bitcoin is worth this bottle of water, then you get the problem that it currently has, which it fluctuates in value so much in the sense it's not fixed. Because if it becomes more fixed, in the sense more moderate in terms of value, in terms of exchange for goods, then I feel like that would be the key time when people are actually going to be starting to actually adopt it over their current currency.
Yeah.
Because, like, you know, Zimbabwe and Venezuela, sure, they have tons of problems, and they're ripe to actually use something like this, because even if Bitcoin fluctuates a lot, it's not even compared to their current home currency at that point.
Right? Yeah. And I think like the point at which we're using Bitcoin to buy a bottle of water, like you can do that today if you want.
Yeah.
Right. And like if you're constantly exchanging your Bitcoin for US dollars or Canadian dollars, then like who cares? Right? Like you're just using it as a payment mechanism. But like we're talking like mainly about like inflation and hyperinflation and stuff. But can you, using your US dollars today or your Canadian dollars today, can you perform programmatic escrow in a transaction?
I haven't tried, but no.
Right, no.
No.
And so the idea is like the hyperinflation stuff and like the governments are bad and like printing money is bad. That's just like one piece of blockchain technology. It's like one very small piece that like the libertarians rally behind and like I get excited about. But like ultimately this is just a better form of money. Like because it is programmable, you can do all of these interesting things with it. Like if we're conducting a real estate transaction, let's say it's $1 million. Typically, when you use escrow, you need to use a trusted intermediary in the middle, right? That there's going to be a human somewhere that says, "Oh yes, I will hold on to this money, and once the contract is executed and everybody signs their name, then I give the money to this party."
Right.
Like, there is now a smart contract on the Ethereum blockchain where you can do that, like without requiring a human being. Right. So somebody just creates a contract, and then I send the funds to that contract address. We both have essentially like keys that can unlock that money.
Right.
Once we agree, we've executed the transaction, we're both happy, we both use our keys to unlock the funds that get sent to you. You no longer need a human being for escrow.
Right. And why is that? I had almost forgotten because it's almost more interesting. I'd forgotten that this was a real estate podcast, but so why is that important? Like from a timing perspective or a trust perspective, is fraud happening so regularly that should be a huge concern? Or like I remember one of my good buddies said, "Oh, like why should that matter? If I'm dealing with real estate and these large numbers, I want to be able to have a slow process and have lawyers as intermediaries to make sure that things are done correctly. So why would it actually be a benefit to have smart contracts?"
Yeah, I think it's like a matter of speed, efficiency, and cost. So anytime you use a human being for something, anytime you involve a human being, things slow down, and then you have to pay that person for their services. Right. So imagine if programmatic escrow is free, like which it essentially is. Right. Like you might have to pay a developer like an ETH or something, which is like $200. But like over time, as there's more competition in the market, there's more programmatic escrow providers, it will likely become free at some point, right? You just maybe have to look at an ad before you use programmatic escrow.
Right.
And so all of these financial services are coming down in price, and they're going to make the barriers to entry of doing anything financial so incredibly low. And so yeah, maybe you do want a lawyer to make sure that everything is done correctly, right? But in a lot of cases, maybe you don't care.
Yeah.
Right, like if I'm selling my house, like, and I'm using whatever, my real estate agent, and they say, yeah, everything's fine, your real estate agent says, yeah, everything's fine, then like, do we really need another person to say, hey, yeah, let me check as well, and then give me $5,000?
Yeah, title insurance guy, gone.
And so, the idea is, maybe this stuff isn't used in every single case on Earth 100% of the time.
Yeah.
But it doesn't need to be to impact people's lives and to make people's lives better.
Yeah.
Right. Like your grandma might still send you a letter, you know, and like that's nice. But like everything else that we do is on email.
Yeah.
You know, like I literally yesterday, I was at my friend's wedding a month ago. They sent me a thank you note. And like, you know, that's nice. Like that's a nice form. It like shows that they care. And like they didn't just type an email. They literally hand wrote a letter to me, and that's great.
Yeah.
But 99% of the time, we want speed and efficiency, and we want to send an email.
Right.
And so I think some portion of the time for very complex transactions, we will need humans to do stuff. But in the majority of transactions that are vanilla, right, like we can use just a smart contract, we can use some other form of automation to take away those other humans that are taking small cuts of everything.
And I just want to speak to possibly the scared brokers out there. Should people be worried if you're like a leasing agent for a building like this one that we're in right now, for instance, or if you're like a residential agent or a commercial agent in investment sales, should we be worried that this technology is going to displace our jobs?
I don't think so. No. So, I mean, the majority of real estate transactions are still humans to humans. And people want good advice on what they should buy, on what they should not buy, on how they should structure certain vehicles, they want advice on lots of things, right? And I don't think the blockchain, like, or any of these technologies really take away good, valuable advice. Where I do see this playing a big role is things that we're talking about, like programmatic escrow, right? So in the transfer of value, and then also in kind of like what my company is working on, which is the creation of securities and the trading of securities. I think those things are where those industries are going to look a lot different in 5 to 10 years. Are things where value is changing hands. And where people are kind of keeping track of things. So you can use blockchain technology to keep track of things very well.
Yeah.
And those kinds of things I see changing a lot. Back office things where people are using pieces of paper still, I think those, as we've seen in other industries as well, it's not just blockchain technology related, those things will become fully digital. And some of those technologies will incorporate blockchain. Like just like the internet has kind of made a lot of different industries not obsolete, but they've changed them a lot.
Yeah.
Blockchain is going to do the same thing for a lot of industries where there's value transfer and where people need a firm, complete record of a lot of different things. And like there's a whole bunch of different ways that it could play out, right? But like at the end of the day, you're like, should a broker or like somebody be scared in the real estate industry? I think if you're providing advice to people, I don't think really like this technology is what's going to be the thing. But artificial intelligence will do it in 20 years.
Oh,
like that's something different.
Yeah. Well, then we're all done.
Then we're all obsolete.
Especially if it's in the supercomputer, and then we're
we all become artists.
Yeah, exactly. And just to touch back on you mentioned Polymath and what you guys are doing right now. I think you were telling me that you had a significant milestone even recently within the company. Can you talk about how the real estate structure might change if somebody wants to sell off a building in hundreds of thousands of parts? If somebody can you speak to that a little bit?
Yeah. So a really good thing that security tokens, these digital security tokens, can be used for is to fractionalize ownership. And the reason being is because you can programmatically restrict transfers in order to keep something regulatory compliant, right? So if I create a financial security for this building, whatever, let's say I own this building and I create an SPV and I have shares in this building, like you can't sell them to anybody unless they've been KYC and AML verified, they meet the accredited investor checks or whatever the case may be for the certain type of offering you're doing, for the certain vehicle that you have. Right? And so with security tokens, because you can programmatically take care of all that stuff, you can open up your investor base much wider because you can ensure that people who aren't supposed to have access to this thing don't have access to this thing. And so like now what I can do is I can take this building, I can chop it up into 1 million tokens, but 1 million shares, whatever you want to call it. They're just digital shares. And then I can sell it in a private offering, but now I can have a completely fractionalized global investor pool, right? Whereas before, you'd typically maybe just sell like a quarter of the building to one investor.
Right.
Or you would sell half the building to one investor. Now we can still maintain this vehicle as being a private vehicle, right? It doesn't become public. We don't have to create a REIT structure. We don't have to do a prospectus that's completely full. We don't have to like register with all these governing bodies like the SEC or whatever. We might just have to file a Form D if we do a Reg D offering for this thing. And then we can still chop it up and we can get a completely global pool that owns a very small piece of it.
Interesting.
Just touching on being able to programmatically fix, I don't even know.
Programmatic escrow.
Restrict transfers.
Yeah, restrict transfers.
Yeah,
In terms of the AML compliance and stuff like that, who's the one that's going to be giving the verification to say not money laundering? Like who's the one that like puts that checkbox in to, you know, meet the requirements so that a transfer can occur?
Yeah. So like the way to think about like kind of the architecture is like here's the issuer up here. They create this token using our technology. Then they sell it in an offering to investors.
Yeah.
Like it's the issuer's job to make sure that things are regulatory compliant. The issuer is on the hook, right?
Yeah.
Like if I start Graeme Co. and I create 1 million shares and I just sell them to anybody on earth, right? Like if some of those people are in Canada or the US, like the OSC and the SEC are going to come after me and say like, you didn't register with us. You can't just sell securities to anybody you want. You have to do certain things. Right, and so it's the issuer's job to do that. So typically they would use an external KYC and AML provider.
Yeah.
And then what happens, like in terms of the technology of how it works, is all these investors, because these are blockchain tokens, they have a wallet address. So they have an Ethereum wallet that's capable of holding Ethereum and all these other tokens, like security tokens. And what they do is they talk to the issuer. They say, hey, like that company looks interesting, or that fund looks interesting, that building looks interesting, I want to buy a piece of it.
Yeah.
The issuer says, okay, cool, go through the KYC process. So they say, here's my KYC provider. The investor talks to the KYC provider, and what they do when they're going through all of the regular checks, like in terms of like, here's my passport or my ID or whatever, and like, here's how much I make, here's my accredited investor status check, they also link their identity with an Ethereum wallet address. And so they say, here's my Ethereum wallet address. This is the one that I own where I want the tokens to be sent. What happens is now that Ethereum wallet address gets added to a whitelist. And so that whitelist is now keeping track of all of the places where these tokens can go. And then additionally on the whitelist are things like this Ethereum wallet address can't buy tokens before this date. This Ethereum wallet address can't sell tokens before this date. This Ethereum wallet address must redo KYC and accredited investor status check on this date. And so that's how you can programmatically restrict the transfers is by using this whitelist technology where you put your Ethereum wallet address on the whitelist once you get KYC and AML verified, and now those wallet addresses can trade amongst each other. But literally, as soon as you try to send one of these tokens to somebody who's not on the whitelist, the transfer fails. Like it physically cannot happen. Whereas in the traditional world, you could maybe pay a sketchy lawyer, a sketchy transfer agent, $1,000, and you could get securities for something that you're not supposed to have.
Right.
Fraud.
Yes, fraud. Yes.
Yeah. So how do you think that this will impact the forms of ownership for traditional real. Like, are we going to start seeing funds being created where people go out and on the buy side, or is it just like a matter of liquidation for certain buildings, or private ownership group wants to sell off 40% of the building's value and wants to raise capital that way?
I think that's what we're seeing today. The majority of things is property owner wants to sell 49% of their interest in something, or 30% of their interest in something, right? Like where we're seeing the most demand is property owner, 60 years of age, 70 years of age, still likes what they're doing, still wants to manage a property or at least be involved to some extent, still likes the cash flow that they're getting, but they want a liquidity event. Mm-hmm. They want $1 million in the bank right now, or they want $2 million in the bank right now. And so what they're doing, instead of figuring out, okay, yeah, I'm going to go create a REIT, I'm going to sell this because that costs hundreds of thousands of dollars. Right? It costs a lot of money to get listed on the TSX. It costs a lot of money to get listed on the TSXV. So where I think this technology is really competing with is the private securities market right now, right? Because in the private securities market, this investor is going to go find someone, and then they're going to find one investor, right? And they're going to sell to that one investor. But now you can actually open it up to a completely global pool of investors. And why you can open it up to this global pool of investors is because they can trade these instruments on a secondary exchange while the securities still remain private. Because you can programmatically control how many people can own these securities, you can still make them remain private, right? So you don't have to do a full public prospectus, you don't have to go get listed on a stock exchange, you don't have to do reporting every quarter. And so the idea is this is helping those kinds of people who want a liquidity event, who they've gone the private route before maybe, right, and they've sold to one investor. Maybe they've been working with a broker-dealer and they're kind of tapped out in terms of the investors that are interested in this fund.
Yeah.
Well, what about the hundreds of thousands of people who've made millions and billions of dollars on cryptocurrency?
Right.
Right? They're in this crypto world, and then they see, oh, here's an innovative company using blockchain technology, and they're going to sell off their shares as tokens. I like tokens. I like how they work. I love the idea of how efficient they are. I love the idea of how I can see how transparent everything moves around, because blockchain, like most of them are completely public, verifiable ledgers.
Right. And I've always wanted to own real estate in Toronto or Vancouver or Edmonton or whatever.
And so now they have the ability to invest in cryptocurrency generally. While having one of these blockchain tokens in their wallet, they can self-custody it, so they don't have to rely on somebody else to hold on to this thing for them. And they can trade it in a global secondary market. And so what we're doing is we're ultimately, at the end of the day, increasing liquidity.
Yeah.
Right, and that's what investors want. Like, investors don't want to be locked up for 5 to 10 years with a piece of paper that they then have to sell, like, themselves.
Right.
Like, that's how the majority of real estate owners sell stuff, is like they just go find someone themselves or with a broker dealer or somebody, and then they sell that whole piece.
Right.
Right. Like, what if you just had 1 million shares of something and you could sell it on like a stock market, something that looks like a stock market tomorrow? And like, that's what's happening with all of these security token exchanges that are popping up, is the ability to sell something in a fractionalized way in a global liquid secondary market.
And are you seeing a lot of this? Has this happened in Toronto through your company? Has this happened, where is this happening, and like how often is it happening so far?
It's the very early days so far.
Yeah.
So right now, there's actually an interesting project at, I believe, Columbia. This isn't through my company, but there's a project right now in Columbia, like the school, Columbia, where they have a res, like they have a res building for the students, and they're selling 49% of it as a security token.
Yeah.
A project that right now I'm working on with somebody in Houston. His client has a property. It's $50 million, and he wants to sell 1/3 of it. So I actually went on my company's, it's called the Polymath Token Studio. So I went on the Token Studio. I created the tokens for the SPV that he's created, and we're going to sell 1/3 of the tokens to an investor who's interested. Right, and so there's a lot of people who are trying it out and saying, okay, like, all right, I'm buying in, like, let me see what it's all about.
Right.
And so kind of the way that I see it playing out is there's going to be a few more people like this, kind of like the trailblazers, who are going, okay, like, I'm interested, I've bought into the idea of increased liquidity, increased transparency, increased efficiency.
Yeah. I mean, you could.
I'm not sure though, but let's try it out.
Yeah.
Right, and then they're going to try it out. it's going to end up working. Like I foresee like really no problems with all this stuff in terms of regulatory compliance, in terms of trading actually being functional. And so other people are going to buy in. More people buy in, more people buy in, until this kind of becomes the default form factor for securities.
Yeah, with increased liquidity too, you can imagine it becomes like just a tiny bit more valuable. I can imagine somebody just going and buying, once it becomes more normal, going and buying a ton of real estate properties, and that is their specialty, just securitizing, 40% of it or whatever, increasing the value, and then maybe selling off the other. Like, I don't know exactly how it happened, but so I just want to be cognizant of your time as well. A quick plug, I don't know if you care about this or not, but can you tell us about B is for Bitcoin, the book that you wrote?
Yeah, so I wrote a children's book. It's called B is for Bitcoin, and so it teaches anybody their Bitcoin ABCs.
Right.
So I became completely obsessed with Bitcoin, blockchain technology, the whole entire space at the end of 2014 after I left my job in finance. And I think it's because I loved Warren Buffett, and he said Bitcoin was stupid.
Right.
But then when I left finance, I think I was allowed to kind of think about it more and just, I fell down the proverbial Bitcoin rabbit hole, is what a lot of people call it. You kind of watch a video and you go, wait, no, this can't be real. And then you watch another video and you go, wait, you can do this? And then you watch another video and then another video and you read another blog and then you meet someone who's also interested and you start talking about it and you realize kind of the possibilities and kind of the revolution that's really occurring here. And I was thinking like, okay, well, like what can I do to help? Or I don't know, I was like, what can I do to kind of give back to this community that's like taught me so much? People are literally putting out hundreds of videos for free all the time. And I was like, I don't know, like I could maybe write a book or something. I was like, okay, cool, yeah. And so I wrote down in my iPhone, I wrote down in my notes folder, like B is for Bitcoin book. And then I just like kind of added a few words, like A is for, actually had Augur originally, which is another cryptocurrency. I switched that to altcoin recently. Sorry, Augur. Sorry. Sorry, Joey. And then I just kind of was adding more words over time, but I never really did anything with it. And then at the beginning of this year, of 2018, I was at work, I was telling my friend about it, and he was like, dude, like, why don't you just make this already? And I was like, well, I don't know, I gotta like find a designer and like I gotta figure out how to make it. He's like, dude, you can find a designer on Upwork in like 5 minutes. Yeah. And I was like, are you like serious? And he's like, yeah, dude, go on it. So I put a posting on Upwork. I said, okay, like, does anybody want to illustrate this children's cryptocurrency theme book? And I got the best guy in the whole world, Mike from Ukraine. He showed me his portfolio. And he literally did some previous work for somebody who wrote a blog about blockchain technology. And it was exactly what I wanted. And I said, dude, give me that. And he was like, okay. So we worked pretty much every day. He hates me now because like I was working him really hard and like I was very much a perfectionist in what I wanted it to look like. But yeah, like every single day for 4 months, just going at it, and then finally came out with the book that I'm really happy about.
Nice. Congrats.
Thanks.
That's cute. I want to buy it for my niece.
It's good idea.
It's on Amazon.
Christmas
I know.
is coming up.
I know.
Yeah.
I was telling Damon to tell you to bring some in.
Bring some.
I know. I was like,
copies.
yo, I want to. I was like, I want to sign copy. My brother would love that.
Yeah, such a cheap guy I am. I looked on Amazon. I was like, I think it was like $35 or something. I was like, well.
He brought some in. Oh my God, yes.
Yes.
I hope they're signed.
So I can sign it if you want.
Yeah,
right?
100%. Do we have a pen?
Thanks, man.
No.
Well, maybe we'll do that afterwards.
My brother's a computer scientist.
Okay, cool.
And he's this chief technology officer of like some weird tech startup.
Right.
We brought him on the show too, but this is like right up his alley for his niece or his daughter. It's just going to be insane.
That'll be sweet. I'm glad.
Do you want to ask Graeme the 3 truths question, or?
B is for Bitcoin. Buy it on Amazon. There we go.
I feel like I hope you get a few sales from that.
Yeah, that'd be sweet. That'd be great.
Do you want to ask the 3 truths question and close this puppy out? Or do you have a lot more others?
I could talk forever, but yeah, we can end this. Close it out, sorry. Okay, so this is our final question. We asked this to basically everybody. It's a sort of left field type of question.
Yeah, we've never we never give it in the prepared notes.
No.
Okay.
So Dayma always explains this well. I haven't done this. Have I done this one before?
Yeah, I think you asked Matt.
Oh, I asked Matt. Okay. So imagine you're 150. You lived an extravagant, amazing life. You know, you're in your hospital bed. It's like, you know, your last 10 minutes on Earth, basically. Who knows where you're going?
Can I?
Yeah, you do.
Okay.
You go for it.
Okay, so this is, it's actually a question from Lewis Howes, if you've ever watched his stuff.
Yeah.
I love that guy. So anyway, so the 3 truths. So years from now, you live an amazing life and you live till 150, 200 years old. You have tons of kids and grandkids and you're very loved, and everything that you've ever wanted to achieve in life, you accomplished. You got there. And you know, you've written several books, and everybody loves you, and they're all around you, but it's your last day, and they're all around your bed, and for whatever reason, everything that you've recorded and everything that you've written has been erased, and you have 3 notes or 3 kind of lessons that you could pass on to your friends and your family and the people who love you. So about how to live life or how to think about things or whatever you want it to be.
Right.
What would those things be?
So 3.
3.
I think, how long can they be?
As long as you want.
Okay. I think the first one would be do what you want.
Mm-hmm.
Like a lot of people just do stuff because they think it's the right thing to do, or they think it's the correct path, or someone mentioned to them, hey, you should go do this thing, and they go, oh, okay, sure, that's fine.
Yeah.
One of the craziest things to me is, so I have an economics degree from Queens, and like I would be with my classmates after graduation. You know, I'd say like, oh, like, well, like, what do you want to do? And they go, oh, I think I'm gonna, I guess, work in finance. I'm like,
yeah.
I've been in your finance class, and I'm like, you fucking hate finance.
Right.
I'm like, what are you talking about? Right. And they're like, yeah, but you know, I think I should use my degree for like something good.
Yeah.
Like something that makes my degree worth it. And I'm like, so you get one life, and you're going to spend the next 40 to 50 years doing something because you happened to sign up for something when you were 18.
Right.
I'm like, you signed up to do something for 4 years when you're 18, and then you feel obligated to see that through for the next 50 years. I'm like, what are you talking about?
Potentially a lot longer too.
Potentially until you die.
Yeah.
Right. And so it's like, do what you want. You know, like I was working in finance, and like I love finance. Like I love investing. I love like watching markets. I love figuring out like how to make money out of money. I absolutely love that idea. But I mean, I was working in finance, and like I was pretty much just like talking to people, trying to get them to give me money all the time. And I was like, you know, and then figuring out what people should do, like before they die with their money and their estate. And I was like, I don't know, it's like I'm just not really like fired up. And so you need to do what you really want. And you need to tell anybody who tells you otherwise to I can swear, right? I already did swear.
Yeah.
So like you need to tell everybody to fuck off.
Yeah.
And so like there's probably something in you that you really, really want to do. And just go do it, right? Like it took me 3 stupid years to make this book, right? I should have done it in like 3 months, but I was just like, oh, I don't know, like it'll be hard and like all this stuff, and I don't really know what to do. And then it's just like, okay, yeah, maybe, but just go do what you want, and that's really what you have to think about, and like what you want. You know, not what your parents said would be good for you, or your friends say, oh, this is like the right thing to do right now.
What you should do, maybe.
Yeah, because a lot of people do what they should do. They think they should do this. But you ultimately have to look really deep inside you and say, no, this is what I want to do. And then you need to go do that. Okay, that's one. Second one, I guess would be like, don't wait. Right? Like, so figure out what you want and then just go do it. Like for so long, like I've waited to do stuff. Like now I'm kind of doing stuff that I'm really excited about and I'm really proud of. But for a while it's just like, oh no, you know what, I can do it when I'm like 20. No, I can do it when I'm 25. Oh, I can do it when I'm 30.
Yeah.
And then you're on your deathbed and you're like, oh, I didn't do it.
Yeah.
Like, what the hell? So figure out what you want, like what you really want, and then start now. Right? Like waiting is only going to make everything worse. You're going to get mad at yourself for waiting, and then you're going to be like, oh, I'm still waiting. Now I'm even more mad at myself, and I'm mad at myself that I'm mad at myself for waiting because I can just do it.
Right.
and you're gonna get in your head, right? Like get out of your head, just go do the first step for whatever you want to do. Start right now. What's the third one? Realize that we're all in this really weird, awkward, shitty situation together. Like,
Okay.
Right? Like, there is literally there's no evidence to suggest that tomorrow the real Graeme doesn't take off the VR headset.
Right.
And then this thing is all gone. Right? Like, there's no way to know that. And so, like, we don't really know what life is, I guess. This is getting very, like, metaphysical and stuff.
Yeah,
but,
it's a metaphysical question.
Like, we really don't know. Like, literally, this could all be a simulation. It could all be, quote, fake. Right? But, like, I feel like it's real. Like, you guys could not be real.
I'm not.
That's what I'm saying. And so, it's like, we're all just completely insignificant, possibly beings, like, floating on a rock in a universe that, like, might be completely made up and fabricated, and none of it's real, and all of it's bullshit. And we all mean nothing, and we, like, literally could all disappear tomorrow, and the universe, and maybe even the real universe, wouldn't care at all. Right? So, like, we're all in this shitty situation together. So, like, you should be nice to everybody else that is involved. Right? Like, that's really all we have is, like, even if we're not real, like, this is still really all that we have. And so, like, you shouldn't just kind of, like, be thinking about yourself all the time. You shouldn't be always trying to achieve things. You shouldn't always, like, be trying to strive for greatness and, like, making your impact on the world. Like, how about just, like, being nice to all these other insignificant creatures that we're all together on this rock in this, quote, maybe universe, I don't know. Maybe, like, simulation, like who knows?
Yeah.
And so, yeah, just be nice.
Wow.
Fascinating thing about this universe being a simulation. There's actually groups of scientists that literally study and try to see if they can find glitches to see if this is indeed
Deja vu, man.
Yeah, I know.
That's
if we're
the
actually
agent's
in the
changing
Matrix,
something.
basically. I'm just like reading about that. I'm like, holy crap.
Yeah.
Okay.
Okay, my favorite Bitcoin meme, before we go, just because you brought up the Matrix. So in the Matrix, when Morpheus is kind of teaching Neo about how the Matrix works, and then Neo goes, so what are you trying to tell me, that I can dodge bullets? And then Morpheus goes, no, Neo, I'm trying to tell you that when you're ready, you won't have to. Right? And the Bitcoin meme is the same thing. It's Morpheus talking to Neo, and Neo goes, what do you mean? Are you trying to tell me that one day I can trade my Bitcoin for millions? And Morpheus goes, no, Neo, I'm trying to tell you that when you're ready, you won't have to.
Unreal. That's a perfect place to end it. B is for Bitcoin with Graeme Moore. Graeme, thanks so much for being here. Thanks for joining us.
Thanks, man.
Thanks, Garret.